Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for our next live presentation from enCore Energy Corp. Now, before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. And if you're interested in scheduling a meeting with enCore Energy, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome our next presenter, William Sheriff. He's the Executive Chairman of enCore Energy Corp, which trades on the OTCQB venture market under the symbol ENCUF and on the TSXV under the symbol EU. Welcome back, William.
Thanks for having me. Glad to be here. I want to tell the audience that you've assembled here about what we think is the most exciting in situ uranium play in the United States. We've assembled an elite team of professionals with deep experience in the uranium industry, and we have 100% of our corporate focus on in situ production in the United States. Our first production is anticipated to be coming in 2023, and I'll walk you through the details here. Hopefully we'll leave some time for questions. The disclaimer statement, I will be making forward-looking statements. And a little background on the uranium industry. It's been a pretty bad 10 years after Fukushima, but things have now resolved. We're into 6th and 7th generation reactors, so safety improvements are dramatic. First time we've really seen a good market with supply-driven cutbacks and demand drive on the positive side. You just simply can't have the green energy focus that we've got with solar and wind alone. Wind doesn't always blow, sun doesn't always shine, and you've got to have that base load power. And there's nothing more reliable than nuclear power, nothing safer than nuclear power. So we're happy to be at the forefront of that. The U.S. is the world's largest consumer of nuclear power, and yet we produced essentially zero of the 47 million pounds we needed last year. So there's a key missing element of that fuel cycle, and that is domestic U.S. production in uranium, and we intend to fill a substantial part of that. Our team comes from two diverse backgrounds. Energy Metals Corp, if you see, started at the back there in 2005 when we had a supply constriction in the market. We did very well, having started for a 1.7 million market cap and ended up selling out to Uranium One for 1.8 billion some 30 months later after reaching the NYSE. On a similar track, Paul Goranson, our CEO, had started Mystania Uranium and was actually selling spot uranium into that large spike you see. The virtue of ISR is it's environmentally friendly, as there aren't any major big openings like open pits or tailings piles, tailings dams, that sort of thing, as you associate with the mining. We're actually water processing, and the plant that we use is very similar to an industrial water supply treatment plant. And as a result, the CapEx is much smaller. The time to production is much smaller, and very, very flexible in terms of pricing efficiencies. So bringing these two teams together 2 years ago, we were first able to acquire two plants that are fully licensed in the U.S. This was by amalgamating what the former Uranium Resources at the time Westwater had. And that gave us the Rosita and the Kingsville plants in Texas, both of which have 800,000 pounds a year production capability. And we've just spent the last year renovating Rosita. We just announced within the last month it's fully renovated and ready to go for next year's planned production. And the well field is being installed as we speak, so we're right on track for that. As I mentioned before, the foundation for the company are the two existing plants in South Texas. There are only 11 built in the country and 4 in Texas, and we have 2 of those fully licensed. The advanced assets, we have a pipeline of production assets that I'll be able to walk you through. 90 million pounds in the measured and indicated category, combining all of our projects, with 9 million in the inferred, and an additional almost 70 million in the historical category. Again, in situ, it's a very green process. It's very environmentally friendly, therefore it's easy to permit, low capex. We've assembled the deepest bench in the business for leading this, led by Paul, and I'll go through a bit more of that later. And in terms of uranium sales strategy, we have a strategy stated to where we want to have 50% of our planned production exposed to the spot market, with 50% under long-term contracts. We're a little heavily weighted towards the front end on the long-term contracts as we're just starting up, but we will see that flatten out over the years to come. We also have a number of other key non-core assets that if you read our news release over the last 6 months, you'll see how we're monetizing non-core assets that don't fit into our production pipeline or into our immediate production pipeline. We also have an investment in a sister company looking towards developing in situ methodologies for other metals other than uranium. Market cap is about 390 million Canadian dollars. We have just over 100 million shares issued. And you can see there we have $11.5 million in cash, along with $5 million in other liquid assets, including marketable securities and mark-to-market on uranium purchase contracts. As you might imagine, in the uranium business, having skipped so many cycles, we do have a lot of white hair on our board, but these gentlemen each have roughly 40 years experience, and I'll highlight a few of their accomplishments as we go forward here. Myself, as I mentioned, former chairman of Energy Corp, as well as being a founder. Paul Goranson built the last 3 in situ plants in the U.S., also was notably president of Cameco Resources and chief operating officer of Energy Fuels. Dennis Stover, I won't read all these to you, but he's a very important member of our team, chief technical officer and one of the 2 inventors of the in situ process. No one's put together any more of these plants and knows more about it than he does. Currently holds 6 patents on the process. Let's get skip down over the next 3 gentlemen. They're all quite accomplished, but in light of time, I'd suggest just refer you to our PowerPoint, which is online, and highlight our latest director addition, who's Susan Hoxie-Key. She comes to us from the Southern Company, where she's a nuclear engineer and was charged not only with fuel procurement, but also with reactor core designs, nuclear fuel bundles. And it's very key to have her as a representation of our customers, our ultimate customer on the board. And she's really helped direct our company going forward. Peter Luthiger, chief operating officer, has operated a lot of these plants going forward. And Greg Zerzan, I will call him out as well, our chief administrative officer and general counsel, formerly served in the Department of Interior under the Trump administration, and also in the Bush administration as Assistant Deputy Treasury Secretary. Really knows the ins and outs of the public land situation in the Western U.S., had 400 lawyers under him in that position. And in the uranium business, aside from Texas, we're usually dealing with public lands in the Western U.S., so his service is invaluable. Advisory board, here again, in light of time, I'll let you catch up on that. But the keys to uranium now, obviously, bipartisan support. This is the first time since 3 Mile Island some 45 years ago that we actually have true bipartisan support for nuclear industry. And also that coupled with the low carbon green initiative, there's really been no better time to be in the nuclear industry than there is now. People often ask me if we're in the first inning or third inning of the game. We're actually still in warm-ups and the game's just beginning. Department of Energy is one of the, there's 3 different initiatives inside the federal government supporting generation of nuclear fuel within the U.S. That is a domestic supply. And the DOE's already contracted, put out bids for contracts in that. Obviously, carbon-free air quality, all of these things are moving in the right direction. Most people are not aware of the length of the uranium fuel cycle. It takes about 2 years to 2.5 years from the time that we actually process and produce yellow cake, ship it to the conversion facility where it's converted into UF6 or uranium hexafluoride gas, where it is then shipped further to an enrichment plant where it is spun through centrifuges to increase the amount of fissionable uranium, U-235, up to about 5% from where Mother Nature left it at 0.7%. That enriched uranium then goes to the fabrication plant where it's put into fuel pellets and into fuel rod assemblies, which go into the nuclear power plant. So the market does not respond to immediate events so much, but it certainly, once they're baked into it, it becomes an important factor, which brings me to the key point. 60% of the U.S.'s required uranium goes through the port of St. Petersburg. That is to say, it's at Vladimir Putin's discretion as to whether or not it continues to flow through. Of that, 20% is originated in origin in Russia and 40% in Kazakhstan. This has really brought to the nuclear utilities front of their mind thought process that we're really at the mercy of Russia for our supply, and that is a large factor behind the renewed not only emphasis but urgency of establishing U.S. production. This is a look of the western U.S., and you can see here the general uranium basins. Our properties are marked with stars. Our initial production in Texas, if you'll note, is 2023. Mid-year next year, we expect to have Rosita in production. South Dakota is scheduled for 2025, and I was just up there spending some time doing community relations, and that seems to be well on track. Wyoming comes in 1 year later with the Gas Hills, and then ultimately New Mexico is 5 to 6 years out. Certainly a more difficult permitting environment, and we also have to find ways to involve the First Nations. South Texas, I've already discussed this, so I'm going to skip right over it. You can see our one of our plants in the background there. So where's our first production coming from? It's actually from the established Rosita brownfield site, and we'll be gaining on the Rosita extension, which is on the north side of the highway there. The second well field will be Rosita South on the south side of the highway. We're currently drilling on what will be the third project there, Upper Sand Creek, which will be a satellite facility augmenting the production there. Here you can see some of the renovation of the plant that's been occurring over the last 12 months, and it's installing new modern controls, et cetera. This plant last operated about 12 to 13 years ago, and now it is in top-notch shape to resume production in 2023. Dewey Burdock, our second project, is 17 million pounds. It's located in southwest South Dakota. It does extend into Wyoming, but we're worried about the part in South Dakota first in terms of our permitting, and that's where we'll see our initial production. I have about 17,000 acres there, 17 million pound resource. I would note that all of our ISR resources are carrying grades of in excess of 0.1 or in the vicinity of 0.1, whereas most of our competitors, their published grades are in the 0.7 to 0.8 area, and in fact, some of them are as low as 0.04 for in situ. So we do have very high-grade projects for in situ. The economics on Dewey Burdock from the PEA are quite robust. I would point out that these will go up due to inflation, something on the order of 30%. Also point out that the price of uranium's gone up considerably from these prices. Point being, this is in the lowest 10 percentile of new projects coming on in terms of cost and in the highest end of profitability. The next project, Gas Hills in Wyoming, very similar situation. This 43101 and PEA was put out more recently last year, so you don't have nearly the amount of changes to make in the economics. Certainly very compelling, and once again, the grade above 0.1, modest capex, and this is a 7 to 8 year mine life, whereas Dewey Burdock was approaching 20 years. Both of them are open to expansion, and both are going to be key producers for us as we build towards that 5 million pound a year production. Ultimately, we have a very, very large resource in New Mexico, which has historically been the largest uranium producer in the United States. We control over 50% of the entire district and have 44 million pounds indicated mineral here, 6 million in the inferred, and an additional 68 million of historical that was done largely by large oil companies. And we are systematically but slowly converting those to 43101 standards. Most advanced project there being the Crown Point. This is federally permitted. It is not state permitted, nor do we have the proper amount of community relations work done to start moving this towards production. But it does illustrate the size of these deposits. 32 million pounds here again at 0.10 or better, 0.105 in this instance. A real core asset for us in the long-term future. By the time we get to New Mexico production, we anticipate having something on the order of 5 million pounds a year annual run rate. New Mexico will put us up in that 6 to 8 million range, and the resources there will last for typical mine lives of 20 years or more. In terms of our other assets, we are working towards developing applications of our in situ technology that we have such a depth of talent in our organization on. primarily looking at gold. But this is a sister company and does not affect day-to-day management by enCore in any way. It's just a side application that, if it's successful, would revolutionize the entire mining industry, and enCore owns about 35% of that. So we have a very clear investment strategy with a clear-cut path to production beginning in 2023 and continuing out for a decade or more. Phased expansion, starting with Texas, then moving into South Dakota, Wyoming closely on the heels of that, and then ultimately into New Mexico. We'll be providing a clean, reliable source of green energy for the U.S. Without relying on foreign imports. And we have a very broad depth of experience and expertise in the entire uranium fuel cycle, especially in terms of the in situ. And obviously the path to cash flow and our management of our contracts versus spot serve to really optimize that. And the other assets just simply provide a means of beefing up the balance sheet as we move forward and exposure to other opportunities to benefit our shareholders. With that, I would wrap it up. Thank you. I'll be glad to take some questions here. I see one here coming in. When the production plan is up and work in the first quarter of 23, how long does it take from the raw ore until the uranium is shipped to the refinement plant? It's actually a matter of days of actually shipping it. So we would expect our first deliveries to be in the third quarter. The entire fuel cycle, how long does it take for it to be refined? I don't know that specifically, but the entire fuel cycle from the time we ship the uranium until it's actually in the fabricated rods in the plant is about a 2-year time frame. Can be as long as 2.5 years. And here's one. Given UEC has been acquiring assets in other countries, is enCore committed to the United States for future growth? We are 100% domestic focus. We don't plan to stray from the United States. We plan to build into being the leading ISR producer of uranium in the United States for United States applications, that is, feeding our world's largest fleet of nuclear power plants. Let's see if we get anything else. Here's a good one. What do I expect the spot price to be at the end of 2023? The crystal balls are a little hard, a little fuzzy, but I think it's pretty clear demand is increasing a lot faster than supply. And the contracts we do enter, I would point out, are flexible. They generally have floors and ceilings that are linked to the spot price at the time we sign the contract, but they also have variable escalation clauses in them based on inflationary factors. So I don't know, if I had to pick a guess, I would say $75, maybe $80 by the end of 2023. But here again, that's just my guess. Are there any U.S. government support programs that we access for our projects? There are at least 3 programs that are currently underway, and that would include the Department of Energy's solicitation for bids to supply the nuclear reserve that only domestic producers that have produced through their plants since 2009 are eligible for. That's an ongoing process currently. There's also a great deal of cash in the, quote, Inflation Reduction Act, which provided something in the order of $700 million, primarily for the conversion and enrichment aspects of the fuel cycle, which right now is a bottleneck in the U.S. But it also obviously impacts directly the amount of yellow cake that's required. And there's an additional federal program backing reactors. All of this is going to require fuel. And that's us. And then there are a number of initiatives from a number of countries, as well as different states in the U.S. Regarding the small modular reactors that you hear so much about, and the HALEU fuel. Again, all of this is going to require substantial domestic yellow cake production. And that's where we really see our input. What's the possibility of getting a takeover from a bigger company? Well, it is the free market system that we have here in the U.S., so that's always a possibility. I don't view it as a likelihood right now. We've had a long history, going back to Energy Metals, where we did 5 mergers and acquisitions in a 30-month period. We've done 2 with the Azarga transaction being the last one, where we picked up South Dakota and the gas hills in Wyoming. So I would expect us to be on the lookout for more acquisitions, but obviously a bigger fish could always come along and gobble us up as well. Here again, that's pure speculation. Let's see here. Any updates on a U.S. listing? Yes, it is in progress. We clearly have qualified, and we would expect further news on that, certainly before the end of the year, if not sooner. And here's a question. Are we going to be operating strictly in the in situ realm, or will we consider looking at conventional assets? No, we are not going to look at conventional assets. We're looking entirely at in situ. The number of factors drive that. Number one, the conventional assets will require building a mill, which is a very lengthy and time-consuming permitting process that's fraught with difficulty. Number two, you end up with a much cleaner system when you're using in situ. That is one that you can reclaim in a short number of years and actually return it to same condition you found it in, if not better, and actually walk away from it, return the land to its original use. So lower CapEx. Our team has been built specifically for in situ as well. So you combine that with the economic advantages in terms of upfront cash, as well as the cost of reclamation, the timelines to getting into production, the timelines for reclamation. It's extremely compelling for the in situ process, and that's where enCore will make its future entirely. So entirely U.S., entirely ISR. And I believe that's wrapped up our questions, unless I see any last minute ones. Thank you.